Welcome to our discussion on the conflicts analysis for diversified and sector mutual funds. As a reviewer of financial disclosure reports, mutual funds typically show up on most reports. It is rare not to see at least one mutual fund on a report. Sometimes these mutual funds are purchased directly from the mutual fund company, and sometimes they are held through other types of accounts, such as brokerage accounts, managed accounts, retirement accounts, etc. For our discussion today, I have created a hypothetical scenario with an employee of the Federal Drug Administration who owns 4 investment funds. Please note the examples are for training purposes only and are not in any way intended to endorse these funds. We will use this scenario throughout the training. An employee of the FDA will be working on reviewing and approving requests by drug companies for new medicines. The employee's investment portfolio consists of $100,000 invested in Janus Henderson Emerging Markets Fund, $14,000 invested in Vanguard Healthcare Fund, $95,000 invested in Fidelity Real Estate Investment Portfolio Fund, and $5 million invested in Invesco DWA Technology Momentum Fund. An employee has a financial interest in particular matters affecting the mutual fund itself and particular matters affecting the underlying assets of the mutual fund. In most cases, the analysis is under 18 U.S.C. Section 208 will focus on potential conflicts of interest related to the underlying assets. OG has issued several exemptions at 5 CFR Section 2640.201 that are applicable to mutual funds. These exemptions mitigate both the conflicts and any appearance concerns. When looking at mutual funds for conflicts of interest, we want to determine whether an exemption applies. If it is a diversified mutual fund, then there are no concerns regarding potential conflicts for the underlying assets. An employee could have $100 million invested in a diversified mutual fund, and as long as it meets the criteria for a diversified mutual fund, then we don't have to worry that the underlying assets may create a conflict. Sector mutual funds create more concerns about potential conflicts of interest, so we really have to be careful with sector funds. It's vital to know the difference between diversified and sector mutual funds. We have included the language for the exemption for diversified mutual funds, which also includes unit investment trusts. Please note that for this training, I will use the term mutual funds, but please keep in mind that I am referring to both mutual funds and unit investment trusts. Please take a moment to review the exemption language. We have also included the language for the exemption for sector mutual funds. Please take a moment to review the exemption language. This sector fund exemption is much narrower and contains a $50,000 de minimis threshold. Note that for PAS nominees, OG is very risk adverse and cautious with our PAS nominees, so we will look at sector funds held by a nominee very carefully. We will talk about that a little later. The first step in our analysis is to determine if the entry discloses a mutual fund. You should start by looking at the definition of mutual fund in the OGE regulations at 5 CFR Section 2640.102. For purposes of the exemptions, we define a mutual fund as an entity which is registered as a management company under the Investment Company Act of 1940, as amended, 15 U.S.C. 80A-1 et sec. For purposes of this part, the term mutual fund includes open-end and closed-end mutual funds and registered money market funds. So if the fund isn't registered as a management company under the 1940 Act, the fund won't qualify for the mutual fund exemption. Examples of investment funds that usually are not registered as management companies under the 1940 Act include hedge funds, private equity funds, venture capital funds, collective trusts, and private pension funds created by an employer. Financial disclosure reviewers should confirm that the full name of the fund is disclosed correctly on the financial disclosure report. If the full name is not listed, it is difficult to determine whether the fund is diversified or sector. Filers may question, why are we asking clarifying questions on mutual fund names? Here are two examples that highlight what happens when full names of mutual funds are not disclosed. In both cases, the funds, Fidelity Smaller Companies Fund and iShares MSCI Europe ETF, initially appeared to be diversified funds. However, I had trouble finding information on the funds as initially reported, and when I questioned whether the filer had provided the full and accurate names of the funds, it turned out that the filer had left off the word Japan from the first fund and financials from the second. Both funds were actually sector funds, and the financials fund actually created a potential conflict for this filer. While we don't require ticker symbols on financial disclosure reports, they are helpful. Please keep in mind that if a ticker symbol is provided on the entry, it should match the fund name. Here are examples of our 4 funds and their ticker symbols. When you see a ticker symbol with 5 letters with an X at the end, such as HEMDX for the Janus Henderson Emerging Markets Fund, then you should feel confident that you have a mutual fund. So based on the ticker symbols, I can tell you that the first 3 funds are mutual funds. You will note that the Invesco DWA Technology Momentum Fund has 3 letters for its ticker symbol, PTF, instead of 5. A 3-letter ticker symbol is typical for exchange-traded funds. Exchange-traded funds, referred to as ETFs, are investment funds that are traded on stock exchanges. Although they are not marketed as mutual funds, because most ETFs are registered as management investment companies under the 1940 Act, they would qualify for the OGE exemption for mutual funds. However, one word of caution regarding ETFs is that ETFs invested in commodities and commodity futures usually do not meet the definition for mutual fund because they are often registered with the Commodity Futures Trading Commission instead of the Securities and Exchange Commission. Once you've determined you are working with a mutual fund, you need to determine if the fund is diversified or sector. If the fund has a stated policy of concentrating its investments in an industry, business, single country other than the United States, or bonds of a single state within the United States, then it is a sector fund. Legal Advisory 00X08 is a tremendous resource on diversified and sector funds. This document provides examples of both sector and diversified funds. So let's look at our 4 funds and determine if they are sector or diversified funds. Please read the investment objective and the principal investment strategy of the Janus Henderson Emerging Markets Fund to determine if you believe the fund has a stated policy of concentrating its investments in an industry, business, single country other than the United States, or bonds of a single state within the United States. I will give you a few moments. This is a diversified fund as it does not have a stated policy of concentrating its investments. Remember, we are looking for the fund's stated policy. How about the Vanguard Healthcare Fund? Take a moment to read and decide for yourself. Here we have an example of a sector fund. The principal investment strategy indicates that the fund focuses its investments in companies principally engaged in the development, production, or distribution of products and services related to the healthcare industry. Some might argue that healthcare is such a broad industry that it would not constitute a single sector, but OGE views healthcare funds as sector funds. For those of you who have reviewed financial disclosure reports in past years, but not recently, you may not be aware of a change to our analysis of real estate mutual funds. No longer does OGE consider all real estate mutual funds to be sector funds. To determine if a real estate fund is a sector fund, you should review the fund documents to determine if the fund focuses on a specific area of real estate, such as nursing homes, hotels, storage facilities, or does it invest in a variety of types of real estate? So for example, please now take a moment to review the investment objective and the principal investment strategies of the Fidelity Real Estate Investment Portfolio. As you can see, there is no concentration on a particular segment of the real estate sector, and this fund would qualify as diversified. Another change from 2019 is how OGE views information technology funds. No longer is a fund that focuses broadly on information technology or internet companies classified as a sector fund. Rather, it depends on whether the fund focuses on specific information technology products or services, such as computer hardware, semiconductors, cybersecurity. So for instance, with our Invesco fund, you might notice that in bullet 3, the principal investment strategy indicates that as of April 30th, 2019, the fund has significant exposure to the information technology sector. However, if you look above, bullet 2 indicates a number of information technology areas in which the fund can focus, such as technology-related products and services, including computer hardware and software, internet, electronics and semiconductors, and wireless communications technologies. In this case, the fund has a stated policy of investing in a broad area of technology, and it would be diversified. So here is our summary for our scenario of the 4 funds. The only sector mutual fund is the Vanguard Healthcare Fund. When we have identified a sector fund or several sector funds in the same sector, we aggregate the market value of the employee's interest in all sector mutual funds that concentrate in the same sector and look to see if the aggregate market value of the funds is $50,000 or less. Earlier, we mentioned that our hypothetical filer owned $14,000 of the Vanguard Healthcare Fund. In addition, just by looking at the financial disclosure report entry, I can see that the healthcare fund is under $15,000. If the FDA has supplemental regulations prohibiting the holding of healthcare sector funds, then the employee would be required to divest the healthcare fund because the FDA's supplemental regulations override OGE's exemptions. But let us put that aside for a second and just examine how we would address this fund if there were no supplemental regulations. The fund value is $14,000, so well below the exemption's $50,000 de minimis amount. The agency should counsel the employee not to purchase any more shares in the fund. However, if the fund was in the $15,000 to $50,000 range, the agency should inquire about the exact amount that the employee owns to see if it is approaching $50,000. If the fund value is over $50,000, then the exemption will not apply, and any asset in the fund would need to be evaluated for conflicts. For PAS nominees, we are particularly cautious, and we require that all sector funds in the same sector have a total value of approximately $40,000 or less in the aggregate. We ask that the value be well under the $50,000 de minimis amount, so there is a cushion for any market fluctuations, income reinvestment, while the nominee is in government service. Also, I want to point out that we can see on this 278 entry that the that the Vanguard Healthcare Fund qualifies as an accepted investment fund, or EIF, for reporting purposes. Both diversified and sector mutual funds with ticker symbols will qualify as EIFs regardless of whether they are diversified or sector. Okay, that wraps up our review of diversified and sector funds. Thank you for joining us.